Welcome to another episode of the CPG Guys podcast. Our hosts, Sri Rajgopalan, Peter V.S. Bond, and Brian Gildenberg explore how brands and retailers engage consumers in an increasingly digitally driven world. And now, here are the CPG Guys.
Hello, folks, and welcome to this episode of the CPG Guys podcast. I'm, of course, Sri, co-founder and co-host of the CPG Guys, and co-founder and partner of Think Blue, your key to unlocking your profitability potential as builders, connectors, and amplifiers. We shape the future of commerce to drive your growth. Please do listen to my older daughter, Ria Raj's music at www.riaraj.com. That's R-H-E-A-R-A-J. And follow my younger daughter, Lara Raj, as a member of the Geffen Records UMG band Cat's Eye. Well, my wife, Kavita Raj, has her own podcast, Lights, Camera, Convo, on iHeartRadio and all streaming platforms. In June, all four of us will likely have a broadcast media mechanism called the podcast. Not joining me today is Peter V.S. Bond, and when he's not co-hosting this podcast, he serves as partnership acceleration lead at Flywheel, division of Omnicom that helps enterprise brands improve their SEO and SEM, growing their e-commerce businesses. Before we get to our guests, we want to ask you to help spread the word about this community we've created in the CPG Guys. Beyond sharing our podcast with your friends, if you're using Apple Podcasts or Spotify as your preferred listening platform, leave us a rating as it helps feed the algorithm that makes us more findable by CPG retail people like you looking for education and entertainment. We're happy that the CPG Guys is part of an impressive collective of highly rated podcasts, including CPG Scoop with Risa and Jennifer, and the FMCG Guys with Daniel, Efrain, and Christine. Finally, we're incredibly proud of our allyship with Next Up, whose mission is to advance the cause of women in business and to promote gender equality in the workplace. Next Up is terrific educational networking resources available to its members. I, of course, serve on the board of directors leading the development committee of Next Up. Links to our podcast, our sister cast, and landing page on Next Up, and the social media profiles of my daughters Ria and Laura, my wife's podcast, can all be found in the digital liner notes of this episode. Now, on to the conversation. We're partnering this episode with Ibotta. Congratulations to them for the recent, highly successful, over $1 billion market cap IPO. Ibotta, of course, is the leading performance marketing platform that has delivered more than $1.8 billion in cumulative rewards to users and keeps growing. Launched in 2012, Ibotta has more than 50 million downloads, one of the most frequently used shopping platforms in the US, and offers cash back on purchases on more than 3,000 leading brands and retail partners. All of this stuff is growing by the day, so these numbers may even be outdated. We're pleased to have joined us today a familiar voice to our followers, the Chief Revenue Officer at Ibotta, a great deal to share about everything from consumer engagement. The growth in all these numbers are rattled off, particularly as it relates to their leadership in this space. By the way, Chris, congratulations, as I mentioned, on the newly minted IPO. He's been an episode in the fall of 2023 and a LinkedIn Live following that. How you can find those, you can simply go to cpgguys.com, type Chris Jensen, and you'll find the episode in a second, or Ibotta in the search bar, and you should be able to find that episode, and I encourage everyone to listen to it. Chris, welcome to the CPG Guys, and congratulations again.
Thank you, Sri. It's great to be back. Thank you very much. A lot has happened since the last time we convened in the fall. So excited to be with you again today.
Of all the providers in this space, based on my own experience of the last 30 years in CPG, if I would have bet on one that would have had a successful IPO, would have been you guys, and y'all have played that down to the bone. So before we get started with our Q&A segment here, can you give us a quick overview of your current role and remit as the CRO for Ibotta?
Yeah, and I'd love to hear more about what you just said and why it was that you thought Ibotta was going to be the leading candidate for that. But I'm the Chief Revenue Officer at Ibotta, which means that I oversee our sales, account management functions, those who are calling on our CPG brands to bring offer content onto our burgeoning network. I've been with the company for about 8 years. Prior to this, I had founded a company in the performance marketing space. And prior to that, I was global marketing director at Whole Foods, where, did all different types of marketing at one point or another, but really fell in love with the targetability and measurability of performance marketing in particular. So,
Chris, thank you for that. But I want to answer your question on why I felt that if I would bet, it would be you guys. That answer is actually very simple. You have many competitors who claim scale. The key word is claim. You have scale. The difference in success and why I would bet on you first is have versus claim. It gets that easy. So thank you for that.
Exactly right. Yeah, I think that's exactly right. You can claim scale. It isn't long before everybody sees through it. What matters is the actual volume that you're delivering for parties, the actual value you're creating, for the different stakeholders in your ecosystem, and we've been really committed to that.
Let me just say, the CPG guys are certainly seeing through it, and that's why I said it. So thank you for that overview.
Mm-hmm.
In the digital liner notes of this episode, we'll include links to your LinkedIn profile, Ibotta's company website, for our listeners to access on the fly while we go on with our conversation. So first simple question for many who may not be familiar or those getting oriented, first time working with Ibotta. Your proposition is different from traditional couponing mechanisms. How do you feel Ibotta's unique business model is actually continuing to drive brands for brands and consumers? I asked this question, Chris, knowing that brands who worked with you for a long time know this. This is more for newer to platform.
Mm-hmm. Yeah, I think from day one, we set out to build a better mousetrap compared to what existed in the marketplace for brand advertisers. We started with a focus on CPG brands, meaning grocery CPG in particular. We've expanded that. But from day one, we really set out to help solve some of the pain points we saw in the marketplace. So, for example, historically, a lot of promotional platforms charged brands on a per clip basis or a per print basis. Other types of ad platforms charged on a per impression basis, per click. Rarely were brands charged on a per sale basis. And so the incentives of the advertiser were not always aligned with that of the platforms on which they were advertising. They tended to be less efficient because of the conversion rates between those top of funnel actions and the actual purchase. And so we set out from day one to build a pay per sale model that more directly aligned our incentives with those of our advertisers. It also just created a lot more predictability in those brands' investment. One of the challenges, I think, in this space has been that performance marketing platforms have historically lacked the scale of some more traditional media. So, for example, compared to a Super Bowl campaign, most platforms, including Ibotta in its early days, failed to deliver that scale. And actually, that was the number one complaint we heard from our advertisers over the course of our first few years. They loved the pay per sale model. They loved the incrementality we drove, but they just wanted it at greater scale so that they could offset some of the less efficient spend they had at the top of the funnel. And that's why we built out the network. So we moved from a direct-to-consumer only property where we managed an app. We've got a browser extension and a website. We've got about 50 million people who have downloaded our app over the course of those years, which isn't terrible, but it's nowhere near the reach of what you might find with a Super Bowl campaign. So over the last few years, we've built out a network where we've extended what we've created out to third-party properties, leading with a lot of industry-leading retailers, including Walmart, Family Dollar, Dollar General. More recently, we just added Schnucks, really just in the last week. And we've now enabled our brands to extend the reach of their campaigns with us to that of Super Bowl scale. We now reach about 91% of U.S. households.
None of this is a surprise to me, like I already declared right up front. I knew this moment would come. And congratulations on adding Schnucks to the platform. I want to now get your excitement around the being public. It brings its own rewards, but it also brings its own tribulations. But give us a quick journey. Startup 2012, 11 quick years passed by. You're now a public company. How does it impact your clients, brands, and consumers alike? And does anything change, or is it routine business?
Well, first of all, I think we're committed to trying to maintain the culture that got us here. That's a key question we get from our teams on a regular basis, or at least we got leading up to the IPO. Is this going to change our culture? Are we going to be less transparent with one another as a company? Are we going to stop trying to innovate and disrupt in the way that we did in a manner that allowed us to get to where we are today? And I'm happy to say that we're committed to making sure that we maintain the culture that got us here. Everything from the transparency we offer our team members, helping them have the context they need to deliver their best work, to our ability to continue to operate with that entrepreneurial mentality such that we can continue to disrupt the conventional norms within our ecosystem. So I think we're going to continue to test, iterate, and bring new products to market that will help us create greater outcomes for both our brands and our consumers, as well as our retail partners. And we're going to be able to do so at an accelerated rate. So I think, the The IPO, more than anything, enables us to have greater resources to be able to do that. We're going to be able to expand our scale even more rapidly than we were before. We're going to be able to bring new cool products to market. We're investing heavily in AI, as an example. As we add additional publishers to the ecosystem, we create just a lot more value for the consumer, for the retailer, and especially for our brand advertisers.
Like I said, Chris, congratulations. And if anything, I see this as a vote of confidence by investors. Take the capital, go chase it. You've added Schnucks, but I look forward to you adding many more such retailers, right? So brands, consumers, and retailers alike are experiencing pretty unique headwinds right now. Where that headwind is coming from, and in my previous role as CCO for General Mills Company, I would say the same thing. Kind of the consumption climate has slowed down. So in this climate, your performing marketing approach has to drive much more value that other tactics cannot. How do you feel about this current climate, and are you guys getting there?
I think there's, our product is a pretty good fit for both brands and consumers in a climate like we're in right now. Obviously, the fact that we cut consumers in on the marketing campaigns that they're being exposed to allows us to reward them for purchasing the products in our ecosystem and to create value for them to help offset the pinch that they're feeling from inflation. So as you noted at the top, we've given away close to $2 billion at this point in cash to Americans. And as you noted, that velocity continues to accelerate. So that's very helpful to the consumer as they're feeling the pinch of inflation, not just at the grocery store, but across all of their spend. At the same time, brands are looking for ways to offset the declines they're seeing in volume due to a variety of macroeconomic pressures, due to inflation, due to strengthening private label, shifts in the way consumers are thinking about their purchases at the grocery store. So our ability to entice consumers to choose one brand over another, including things like private label, is really more valuable to brands than ever before. One of the big differences, I think, of today versus our ability to do that 2-3 years ago is really the scale we're delivering. We're delivering very meaningful scale to brands that can move, points of share for them, which is something that I think is quite noteworthy and turning a lot of heads with our CPG brands today.
No debate about that, Chris, whatsoever. So like I've mentioned multiple times, I got the faith in you guys, and this is going to expand even further. Brands should be contacting you. For those that don't, get serious about Ibotta is what I would say, right? Consumers need the value proposition now from brands whatsoever, and your network certainly allows that partnership with you guys and the retailer to be able to do that. And as you scale more, this is only going to get better and better with a consumer lens, which is who both you and I serve at the end of the day, Chris. So what role do you play in driving consumers to explore additional or new products within a brand portfolio? Let me just explain. Innovation has slowed down last 3 years, but obviously brands are trying to make up for it now. And aisle reinvention is also the name of the game of most supermarket retailers at this point, given consumption habits have shifted. They've strengthened around some core. They've moved away from certain categories. For example, salty snacks are hot and heavy. Cereal is a diminishing category overall. How are y'all following that, and how does the platform actually help bring in new households, lost households?
Well, incrementality is the name of the game, as you know, across most advertising platforms. That's certainly true of our advertisers as well. They're always looking to reach new consumers, to reach existing consumers with new products, to re-engage lapsed consumers. So it's really important for us that we're putting the right message and the right value in front of the right consumer at the right time in order to drive those behaviors on behalf of our brands. It's also great for the consumer because they're seeing that personalized experience that's relevant to them. And it's exciting for them to be introduced to new products that are relevant to what they're interested in. We've done this, I think, in a number of different ways over the years. I'd say at our core is our direct-to-consumer property to start. That's where we really focused over the course of the first several years of our existence. And so we've got about 12 years into a very thoughtfully designed direct-to-consumer app with an incredible UX, which is built to drive discovery, which is for the benefit of both the consumer and the brand. We also help, make sure that brands have the right context and information about their space and their category to be able to put the right offer and the right message in front of the consumer in order to educate them about their products and to ultimately drive purchases. So ultimately, we kind of orient our entire ecosystem around this idea of inspiring that discovery, inspiring that incremental purchase. We've had a lot of success with it.
It's good to hear, Chris, because the need of the hour, like I said, is to bring back households, and innovation is one way you can bring new households in as well. So I want to talk about, a grocery store is more than one aisle. So let's talk about cross-category promotions to meet the diverse needs of today's consumer, basket building, etc., and drive portfolio penetration for brands. My past alma mater was a great example of being in 27 different aisles, right? How does your UX cross-category promotions, and Gentleman's is not the only one in that many categories. There are many who are in more than one category. How does Ibotta actually enable this and make it successful?
It's been a key focus over the course of the last couple of years for us. So when you walk into a Walmart store, of course, probably less than half of the shelf space is allocated to grocery purchases. And yet within our ecosystem, so much of the focus has focused on grocery purchases, core CPG grocery products. And that's been amazing. And there is a tremendous opportunity for us to inspire cross-portfolio purchases for them. We do so through, identifying the right consumer with the right message, meaning you might have a consumer who's very loyal to a core brand, but who isn't really buying into the innovation. Maybe they're buying competitors within certain categories, but not yours. Our ability to know that, help our brands understand that, and then reach that consumer to inspire more deep engagement is sort of foundational to what we've created for our CPG brand partners. But over the course of the last couple of years, what we've really worked to do is expand that beyond core consumer grocery products. Thinking about those other items on the shelves at Walmart, you've got all kinds of great general merchandise categories like apparel, electronics, toys, and beyond. There haven't been a lot of amazing performance marketing tools available to them historically. They've had to rely heavily on more legacy tactics to reach consumers. So we're pushing heavily into that space to be able to serve those brands with some of the same performance marketing tactics, some of the same efficiency that have benefited their counterparts on the grocery side, and really starting to see the snowball effect of that, which is amazing from a consumer point of view, because now there's a lot more ways by which you can get rewarded when you go into the store. It's very appealing to our retail partners as they're looking for additional ways to create value and engagement amongst their consumers. And of course, really great for the brands as well.
Yeah, I got to imagine when a consumer comes in store, has used your app, it's also helping drive for new traffic and also strengthening traffic, repeats, things of that nature. To me, that's the most attractive part of this. So let me remind our audience, I'm speaking to Chris Jensen, a repeat guest on the CPG Guys. You can find his previous episode on the CPG Guys simply by going to the search on our URL, www.cpgguys.com, and typing either Chris Jensen, Jensen, or Ibotta, Ibotta. He's also the Chief Revenue Officer at Ibotta. So interesting perspectives indeed. One such interesting perspective, let's dig in a little bit, is you come from retail. You have not been a classic service provider all your life, right? Having come from retail at Whole Foods, pioneering performance marketing there, leading the revenue team at Ibotta now, those experience, what are the lessons you can share with brands about incrementality, basket building, a little of what we just skimmed the surface on?
Yeah, I think that experience was really helpful to where I am today, because it allowed me to really understand the mentality of the advertiser. I have greater empathy for the various trade-offs that they're trying to balance in a world of constrained resources. And that's ultimately what made me fall in love with performance marketing, is the predictable nature of it, the efficient nature of it, if done well. There were a number of things that were really important to us at Whole Foods when we really started leaning heavily into performance marketing, probably 12 to 14 years ago. And I still see brands even today not adopting a few of those things, which is a little bit surprising to me. So as an example, a lot of brands will first default to thinking about incrementality as focused primarily on new customers. And that makes sense because it's really easy to see incrementality in the face of a new customer walking in the door. But as we know, oftentimes it's harder to persuade that person to take action, and therefore more expensive to acquire an incremental sale out of a new customer versus an existing customer. I think there was an adage, thrown around a few years ago that it's about 5 times more expensive on average to get an incremental trip out of a new customer compared to an existing one. And so, of course, there's a lot of different ways by which we can inspire incremental purchases, new customers being one, but also building the basket size or driving an incremental trip out of an existing customer, reacquiring a lapsed customer, stealing market share from a competitor, getting a person to purchase cross-portfolio. There's a lot of different ways by which we can inspire incremental behavior. And I think brands need to really rethink their loyalty continuum as not binary, not just new and existing, but rather it's a loyalty continuum. And brands need to take a multi-pronged strategy to meet each consumer where they are and encourage them to move up that continuum. And then the second thing that we often observe is that I think brands need to take a higher standard, insist on a higher standard of measurement. So I'm still surprised at the approach a lot of brands will take to measuring their media, which often includes a lot of modeling tactics based on a lot of assumptions, which is often not based on real-time data, but rather data that may have occurred 6 to 12 months ago. A lot of times brands will look specifically at lift, but not really at true incrementality. So they aren't controlling for things like seasonality. And, in today's era, when you've got platforms, not just, you've got platforms like Ibotta, but you've got, retail media and others where you can have more deterministic measurement. You can actually run things like test versus control to say, did the presence of this stimulus, and in our case, that stimulus is often a promotion, did that influence a consumer's behavior? And did its absence, what would have occurred in its absence? Being able to compare those two things is really meaningful to helping understand, is your marketing mix working? And I think, I'm hopeful that we can continue to push brands to insist on that higher standard over time.
So, Chris, before I get to the next topic here, which I wanted to get to the kryptonite of large brands and how D2C brands are increasingly getting space on the shelf, I do want to ask you, how are y'all actively trying to seek partnerships, or is there an area you should be with RMNs, retail media networks?
Yeah, we feel like we're a great complement to RMNs. They obviously every single retailer, or the vast majority of retailers, are thinking about their media strategy, following in the footsteps of some, the great success that the likes of Amazon and Walmart and others have had. It's high margin for them, often in otherwise very low margin businesses. It also creates an opportunity to more deeply engage their consumers if done well. So I think it's a smart tactic. What we look at our platform as being complementary to it, for the reason that we have the ability to help those retailers digitally identify more consumers. And in order to create a really great RMN, you kind of have to know who the consumers are and what they're doing, how they're behaving. And so you can imagine where you've got retailers who have had a somewhat, non-existent or nascent retail loyalty platform historically. They have a lot of anonymous consumers. And so our platform gives those consumers a reason to engage. Otherwise, I'm not sure those consumers are simply going to pass over their credentials and their data just for the retailer's benefit. They want some value in exchange. And so often a reward for their purchases is one of the best ways to digitally identify consumers and get them to participate and feel like they've got a good value exchange. The other thing is that we really focus on national promotions and the ability to source our promotions out of national budgets. And I think that's a difference between us and some of the legacy coupon platforms, which focused a lot more on shopper platforms.
Trade budgets.
Trade budgets in particular. What we'd like to see is a reallocation of national dollars that might go into all kinds of different national tactics deployed to this very, very efficient mechanism. And then the retailer can work with the brands to divert those shopper dollars into, RMN engagement to help them with something that may feel a little bit more strategic to both the retailer and the brand as they want to more deeply engage that consumer through their media network. So we found that these things have been very compelling to our retailer partners, and I think it creates a lot of value for all parties in the ecosystem.
Very well said and crafted there, Chris. Also, when a brand chooses to invest with you and offers to give value to the shopper via national budget, you do need a mechanism to communicate that, and the RMNs can actually serve that purpose to communicate that pretty clearly in the shopper journey. So I'm going to go back and ask you the question on what I call.
Can I just say one
absolutely.
point on that, Sri? I think it's a really good observation. What we found is that the most powerful thing that a brand can do is combine the best of both, right? You have exposure media run through the RMN in the form of everything from sponsored search to display ads and that kind of thing, which help create awareness and get your product in front of the consumer. But oftentimes the conversion rate on those isn't amazing, and what we found is that pairing those with a promotion creates a reason for a consumer to pull through and convert. So you end up driving up your return on ad spend associated with the RMN significantly when you pair those things together. And so they're very complementary.
Very, very well said again, Chris. So I'll go back and ask you the question on D2C. Arguing D2C is on the rise is foolish, because it is. It's not the D2C of yesteryears where D2C is growing. It's more D2C is entering the store. And that's how they're getting their scale. So how are you partnering with these smaller brands and D2C brands to deliver value for them?
I would say first and foremost, e-commerce has been pretty important to us for many years. We've played in e-commerce and with direct-to-consumer brands for probably 10 years at this point. We really accelerated our investment in grocery e-commerce, probably before the pandemic for a couple of years, and then furthermore in 2020, as consumer shopping really shifted online for grocery, we doubled down on it. Today, even across our ecosystem, we probably over-index toward online grocery purchases relative to the national average, in part because that's consumer preference, but also it's really, really valuable for our brand partners as well. On the D2C side, we want to be there to help support our brands as they go down this path. And a lot of our brands have indicated that their D2C presences are relatively small in terms of the volume they're generating relative to some of what they've done traditionally. And yet they feel like they're really strategically valuable, and they continue to invest in them. So we want to meet them where they are as well. We've got mechanisms to be able to tie into that, to be able to help drive them traffic in the same way as we drive traffic to brick and mortar retailers. And we've done this again for years. We've got, you think about great brands with tremendous D2C presences like Nike as an example. We've worked with them for many years. There's probably a whole bunch of these that we could name. And our ability to bring that experience to the table for brands who might be dabbling in D2C for the first time can help them be successful.
Awesome. It is indeed much needed. So I wanted to make sure we can get that out there. So we talked about creating value. We talked about, cross-category promotional opportunities, national dollars versus versus trade-specific budgets, etc. But let's talk a little bit more about that very value creation. Two pieces of value creation that brands have started doubling down on in this post-COVID era is repeat purchases, because they want to hold on to household. And the second part is when you do repeat purchases, I think for the first time in CPG history, large market cap brands are taking LTV pretty seriously. They don't have the expertise. You certainly have the expertise, and I call that loyalty. So how are you working with brands to incentivize repeat purchases, measure and communicate loyalty? And I'm assuming when you do that, it's going to deliver the sustained growth for brands as well as household penetration.
I think it's particularly important right now. A lot of brands have dealt with declining volumes and some share loss, especially over the course of the last couple of years, as there's been this increase in cost in the grocery store, as a lot of them have taken price, a lot of the brands have taken price. Consumers have attrited to lower cost alternatives or private label. And I think for that reason, just as you noted, Sri, we're starting to see and talk about LTV a whole lot more than brands were a few years ago, because they recognize the importance of keeping consumers engaged over time. So it kind of comes back to what we talked about before, which is thinking about how do we make sure we're reaching that consumer with the right message at the right time. It's not simply about driving that new consumer, but it's about also making sure that they stick around and maximize the long-term value they're creating. So can we reach them with the right offer at the right time, just as they might be thinking about going back to another brand? Can we help keep them on that LTV highway, so to speak, as opposed to taking the exit ramp to one of their competitors by serving them the right message just before the exit is available to them? So that's one example by which we think about that. We help brands measure that because we've got so much organic purchase data. So we track somewhere in the ballpark, I think, of 2.6 billion line items worth of purchase data across the U.S. retail ecosystem down to the UPC level. So that's a lot of data. The vast majority of what we have is organic purchase data, meaning it's not influenced by incentives. And the cool part about that is we can see how consumers are behaving over time, what we call longitudinal data, which allows us to have greater insight into the LTV of consumers. So we might introduce a consumer to a brand through a promotion. We can see what that consumer does thereafter. How do they behave? And what are the right times to re-engage that consumer in order to keep them on that LTV highway, so to speak?
So I want to get into that very topic that you just discussed, which is the organic purchase data, right? I want to make an assumption and you can bust the myth right here. The assumption is Ibotta working with brands to design programs that actually resonate with different household demographics and drive penetration in key markets, which is, again, household growth to me. It's that very organic data that does that. So can you talk to that a little bit more? What a partnership with Ibotta looks like campaign over campaign to do that?
Yeah, I mean, what we try to do is design the campaign almost bespoke for each one of our brands based on their specific KPIs. We have the advantage of this rich purchase data, which helps us understand how consumers are behaving within each of our brands' categories, what's happening to their share and how consumers might be switching back and forth between brands, which really allows us to help make recommendations and design campaigns in a manner that helps optimize them for efficiency and impact. I think that's pretty key. We also have the ability to reach such a large audience. The ability to reach 90%, 91% of U.S. households means that we can help brands reach their target consumer really regardless of who that consumer is across the U.S. Chances are, if you're an American, you are in the Ibotta Performance Network. And so that's a meaningful advantage when brands are trying to design campaigns to go after these cohorts of consumers.
So, Chris, you're here on the CPG Guys. You're reaching thousands and thousands of our followers from decision makers at brands. If I asked you, Chris, what are categories or aisles that you want to expand in, that you think you can bring more partnership value, not just for a brand, but also from consumers? What would your big message to brands be? What are those aisles you want to reach that you aren't already in or looking to expand?
That is a great question, Sri. I think that there is a lot more work we could do across every single category within the store. I mentioned that we're underpenetrated within the general merchandise or the durable goods categories, in part because, we got a later jump on those, but we've made a ton of progress. We work with hundreds of brands in that category today, just based on our efforts over the course of the last couple of years. There's a tremendous amount of additional work to be done there in order to greatly serve that market and bring a lot of those offers to the consumers in the ecosystem. But even within the core grocery space, we work with, as you said, over 2,400 CPG brands. We work with, thousands of brands and retailers in total. And yet there's a lot more I think we can do with each to better serve them, to make sure that we are helping them spend their marketing mix as effectively as possible, that we're helping them measure the efficacy of their marketing mix as effectively as possible using really best-in-class measurement tactics. And then I think the world of AI opens up a whole new frontier of ways by which we can serve these brands in a manner that's much more sophisticated, efficient and effective than legacy tactics provided.
My message and challenge to brands listening to you, Chris, would be a simple one: to actually work with you to try and understand that when they invest in their marketing mix in a plethora of ways, are they better served working with you to deliver value for the consumer for all the reasons we've discussed, the primary one being household penetration through organic use of the data sets organic data sets that you already have, right? To me, that is the number one opportunity, and that's what I kind of ponder and think if I was a brand leader. The next and last one I have for you on the show, we always call it the CPG Guys Fast Forward, and that is, as Ibotta grows and the world changes in this post-pandemic world, clearly value seeking is the number one game. So love for you. I don't want to say crystal ball. If you were to look into this space of value in the future, do you see this growing further and further? And Ibotta doubling, tripling down in frequency as well? What do you see in the future in this space?
Yes, I think there's so much runway ahead. We were in the early innings of our ability to bring that value to the consumer, and the ways by which we can deliver that value are going to get much more sophisticated, such that these should be the first dollars in for a CPG brand. These should be so much more efficient for brands to help achieve their top line marketing objectives, including brand building. The best way to build your brand is to get your product into a consumer's hands. But I think that there's a lot more to come when it comes to how we personalize that experience, particularly on the shoulders of AI, being able to put the right message and the right value in front of the right consumer at the right time, down to a one-to-one level that I think would have been impossible 10 years ago. And I think that will really accelerate this across the ecosystem. And I'm thrilled about what comes over the course of the next few years.
That would make two of us, Chris. I'm thrilled to see how this industry evolves and how value-seeking behavior by the consumers, how brands respond. So I encourage them to get in touch with you. Let me remind our audience that you can get all of our content by simply going to a web browser and typing cpgguys.com. If you think you or your company has some thought leadership to contribute to a community discussion, drop us an email at contact@cpgguys.com. Again, that's contact@cpgguys.com. And maybe you can join us on this podcast just like Chris did today. Don't forget to drop us a rating at cpgguys.com on the navigation bar up top. It tells us how we're doing, whether we're having the right conversations and the right guests. Thank you for the 31,000 plus followers on LinkedIn. We know that's huge, but without you, the show doesn't exist. Thank you for the DMs, likes, clicks, comments, and just engaging with us on a daily basis. Chris, I can't thank you enough for making time on a Friday afternoon to join me and have this very important discussion at the time the CPG industry is on value-seeking behaviors and how you can provide a unique gateway into actually delivering household penetration one more time.
It's my pleasure. Thanks again for having me back. Congratulations on eclipsing the 30,000 mark. That's huge. You guys have made a great deal of progress at growing this thing over the course of the last few years, and it's really excited to see the growth. So I wish you the best of success as you continue forward.
Thank you, Chris. We're especially proud of the fact that we'll be hitting episode 400 soon, so look out for that in a few weeks. That's a wrap of this episode, and we will see you soon in another episode of the CPG Guys.
The content in this podcast episode is provided for general informational purposes only. By listening to our episode, you understand that no information contained in this episode should be construed as advice from CPG Guys LLC or the individual author, hosts, or guests, nor is it intended to be a substitute for research on any subject matter. Reference to any specific product or entity does not constitute an endorsement or recommendation by CPG Guys LLC. The views expressed by guests are their own, and their appearance on the program does not imply an endorsement of them or any entity they represent. The views expressed by CPG Guys LLC do not represent the views of their employers or the entity they represent. CPG Guys LLC expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, or inability to use this podcast or the information we present in this podcast.